This morning, the Bureau of Labor Statistics releasing the April inflation report. The stock market opening in less than 30 minutes, and now futures are starting to react. The new CPI data shows the price of goods has gone up 3.8% across the board. That's up from 3.3% in March. The conflict overseas is rattling the energy markets and household budgets. Brent crude oil jumped nearly 3% Monday, with trading above $100 a barrel. The Trump administration now weighing next steps to ease costs at the pump and at the grocery store, including lower fuel taxes and more beef imports.
We had to make an excursion to the beautiful country of Iran. We didn't want to let them have a nuclear weapon, and we made the right decision, and we've got it pretty good, and those prices are going to come crashing down as soon as that's over.
NewsNation's Marcus Espinoza is outside the New York Stock Exchange this morning. The inflation numbers are finally out, but there are some predicting or forecasting that things could get worse before better when it comes to fuel and grocery prices.
Hey, Marni, good morning. Yeah, really interesting. Let's bring up those future numbers again, because as soon as this report came out, right there in the red for the market, it's going to open up at 9:30. We'll see what happens when that takes place. But a reality check for this data that came in that investors were unfortunately expecting but not hoping for. So the Labor Department says headline inflation hit 3.8%, which matches what economists expected. But core CPI, which excludes certain things, hit 2.8%. That's higher than the 2.6% markets were hoping to see. It's a sign that stubborn prices aren't budging because the Fed was looking for signs it could eventually cut interest rates. However, this hotter inflation combined with rising energy prices really could force the central bank to keep the cost of borrowing higher. We're seeing that in the real world. When you see people trying to buy a house right now, more and more are sitting on the sidelines, Marni. The springtime usually is the prime time to purchase a house. That has definitely slowed down because these interest rates, they simply aren't budging because inflation is not cooling off.
No, it's not. And Marcus, it's all happening as Kevin Warsh appears to be ready to take over the Fed. So how might markets react to that change?
Well, I think a lot of people expect Kevin Warsh to come in a bit aggressive, but he might not be able to because of the high rising cost of oil. And that's a thing that's affecting everyday life. It's also affecting these interest rates and inflation clearly. So he may not be able to do anything if this continues to roll on here. So investors are certainly going to keep an eye on it. He's inheriting a federal still dealing with the stubborn inflation. And then at a moment when markets are desperately looking for clarity on where interest rates go next, it adds a bit of uncertainty for investors because Warsh believes the Fed should stop telegraphing its moves here and trying to instead look at the future and what's going on. So the CPI report has come in. We got that new data there, and I think it is what investors expected, but I don't think it's what they hoped for, and I don't think it's what Warsh hoped for, but I think they have no choice right now. This is what it means for our viewers at home, for everybody in everyday life, is that a lot of people are going to continue to wait on these interest rates to buy a house, to refinance a house, to purchase a car. This war in Iran has completely messed up the timeline of these expected interest rate cuts, and that's what we're seeing right now in the market.
Yeah, maybe you rethink some big purchases, at least for the time being. All right, Marcus, thank you. Still a
Thank you for watching. Subscribe below and download our NewsNation app right now on your phone, and you will get fact-based, unbiased news for all Americans.